welcome back to April 10th. Facebook Live, almost tax day for all you cannabis accountants, CPAs, CFOs, bookkeepers. I hope you remember this year we're going to talk about your 47111 cost accounting for 2024 in the recurring financials so you can lower taxes for your clients. It's actually the best way and the least known way, especially by clients in the industry that just have no clue. They think the best way is to set up 20 entities, which is not the best way. That's under Harborside, that's a different topic. So let's talk about cleanup. Cleanup is a very important part of onboarding. We're going to be doing most cannabis clients are going to be pretty messy. They may have several entities. They might have farming and manufacture and retail. They If it's a new client, who knows how many years you'll have to go backwards. Since we're right now in tax day, you definitely will at least be looking at 2024 tax day, so you want to check that out as well. Onboarding, we talked about a little bit last time, but there's just a lot of stuff you want to make sure even before cleanup. You've done the engagement letter right, you've got it signed, you've collected your retainer, you've given your client your PBC list. It's going to include every last thing, not only that you need to do the go forward engagement, so all the records and organization docs, everything from again, it's a different topic, but to do the cleanup right, you need all these documents like your organization documents, your insurance documents, your real estate documents, your cannabis licenses, your bank statements, payroll records, invoices. I go on and on and on. We have lots of things in that PBC list so we can get started the right way. It's also going to help assist our cleanup as well. So that's very important. We're going to start building out what I call a perpetual data room. Also, it's going to help both the cleanup going backwards and it's going to help the go forward, not just the accounting going forward, but also so your client will never have to go through a cleanup again. They'll be cleaned up and tick marked and tied out every single month as well. And so you also want to get client and equity debt confirm letter and start working on walkthroughs and internal controls. So that's going to be all at the start. Now, when we go backwards on our cleanup, let's just say there's just last year, they were in year one. So more than likely, I'm not going to like their chart of accounts. They're going to be on QBO or Zero or something. I'll probably download it into Excel. Their trial balance. So what's the trial balance? It has all the balance sheet accounts at the top, and it has all the P&L accounts at the bottom. And we'll use materiality, and we'll definitely tick mark and tie out all the key balance sheet accounts at 12/31, whether it's cash or inventory or fixed assets. We want to make sure that we have some evidence of existence for one, and accuracy. For liabilities, we want to make sure we have completeness. We want to make sure there's no hidden liabilities or hidden equity out there that we don't know about. Very, very important on the liability side, but we'll start with that. Download to see where we are. We'll also use the GL downloaded so if it says fixed assets or whatever, say it says equipment on the balance sheet or on the trial balance is $400,000. I'll go to the GL general ledger, since I'll pull down say it's 350,000 is one machine, and there's a bunch of little things. We'll use materiality, but we'll want to make sure, okay, do we actually have an invoice for that $350,000 machine? Do we have a picture of it? Does it actually exist? So we'll do that with each balance sheet account. We'll walk down down those balance sheet accounts, make sure they're tied out, they're accurate, they exist, they're complete. Those will be biggies before we even get into reporting. And we'll also be looking, so say it's a farm or manufacturer. I'm just going to toss this link into Facebook here, 47111. You can just Google that if you want as well. So that's basically which shows you how we do cost accounting for any manufacturer or farm. or processing plant for that matter. So we need to do that. If we do the cost accounting, it says right in, you can read the words in 47111 if you're doing that both in your recurring financials and in accordance with GAAP, then there's a whole category of costs that we can add to inventory, which is going to help lower our client's tax bill, which is very, very important to them. So when I'm going back to cleanup, I'm going to immediately look like rent, for example. Say it says in there was 8 months of rent and it was $1,000 a month rent. And if rent expense shows 8,000, I know immediately they did not do cost accounting. And I know immediately, say it's a farm, that they didn't move part of rent, because what do we have to do every month with rent or any other of these many indirect costs on the trial balance, like utilities or indirect labor, etc. We need to look at the cost. We need to look at how we're going to allocate that between inventory, WIP, and finished goods, cost of goods sold, and rent. So that rent number of $8,000 is going to end up in 4 places. And so we need to have a way to do that, and methodology and tools to do that. So like in our program, we use what's called our flower calendar to help get equivalent units, and then we'll go in each quarter or month and make those allocations. Now, if we're doing that, 47111 says, oh, well, that's cool. If you're doing that, you're going to get to put what they call category little I 3 times. And they say right down here, these are other costs that you can put. Let me see, where is my little I 3? Well, hold on a sec. I lost it. There it is. Indirect production costs that you can add to inventory only if you're doing it in your recurring financials. And these are big numbers: taxes, depreciation, employee benefits, strikes, rework labor, scrap, factory admin, officer salaries, insurance costs. So if we're doing GAAP cost accounting, we get to take those extra costs that I just listed and put a bunch of those into inventory and cost of goods sold, meaning our tax bill is going to be lower both this year and next. And so it's very, very important to make sure we're doing that in cleanup as well. So if I find a client right now that didn't actually do it, I'm going to actually go back and do at least 2 quarters of that cost accounting, so we can say with a straight face, yes, we actually did it in the recurring financials. We're going to clean that up for that reporting for the in-house books. And then when we get to the tax return, great, we did the cost accounting. The cost accounting that resulted in a cost of goods sold on our GAAP financials is going to be what we're going to report on the tax return, and it's going to be a bigger number, meaning a lower tax bill for our clients. So that's very, very important. We're going to do that. We're going to also do things like inventory. Say they didn't count inventory at year end. Well, we're going to count it right this second. Hopefully they counted it on March 31. If they didn't, we're going to count it today, and we're going to roll it back to backing out sales and purchases. We will roll it back to a tied out number at December 31, because we want to have a really good inventory number for our work in process for our grow or our manufacturer, both work in process and finished goods. So that's very important to do as well. Also, I'll be looking at seed to sale reports. So every state has state required seed to sale. So whether it's Metric, MJ Freeway, BioTrack, I think there's one more. I'm just posting metrics here. If you don't understand Metric, go take their training. They have lots of trainings. You can learn a little bit more. It's kind of crappy software, but you can learn it. But you'll want to download the reports. Like, for example, what does Metric say they had plants as of 12/31, or what does it say they have today? So when we go count today out in the field, all those plants, we can go look at Metric today and make sure those are tied up, because not only are we cleaning up the past, we can go ahead and fix that for the go forward, as inventory is just a really important number. Same on cash. If there's cash, which often there is, we're going to make sure we've tied it out, counted it today, and we're backing that back to year end, to bank recs or whatever counts, double counts. And by the way, at the same time as we're doing this cleanup, we're going to be part of our onboarding process that goes into cleanup is building out our accounting policies and procedure manual, implementing internal controls and corporate governance. So as you're doing cleanup, you're probably going to find tons and tons of holes and things that need to be fixed, but we'll be documenting those in our manual and making a list of them. Hey, this one's crucial. We need to start doing this tomorrow, like daily cash counts. You're not doing that. Or AP being reviewed by the owner before checks are signed, or whatever it is, or expense reports signed. As we find holes and problems, some of them we'll fix immediately, some of them we'll just put on our list, hey, let's get to that next month. But we'll, are they counting inventory every month at the farm? If not, we'll implement that immediately. April 30th, they will be counting inventory. And not somebody who has access to the books. So we're going to make sure we have segregation of duties as well. So that's kind of high level how we'll do our cleanup. We're going to, again, make sure we've covered materiality, all key items on the balance sheet for the last year. Also want to look at the key items on the P&L, make sure we have support for those, like sales, for example, or payroll. And once we do that, we'll make a big journal entry, more than likely with lots of corrections, just one big entry at year end. And so that way on January 1, we will know our balance sheet is rock solid, which will mainly be cash, maybe receivables, inventory, fixed assets. Those are going to be the biggies, maybe some intangible. And then also on the liabilities, we'll make sure we've got AP right, we've got the any and all debts listed, and also equity right. The P&L will be zero on day one. We'll put in a new chart of accounts for 2025, and that way we will have a clean set of books. We'll also get our journal entry for last year, and then hopefully we'll be ready to file the tax return. And then we'll be good to go and ready to move forward. So hope this helped you on cleanup. I will be back next week, and we will talk more. Have a good tax day, everybody.